What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the SPY, the QQQ, and many other stocks out there. I'm going to talk about Tesla and Nvidia and what's going on with the markets. I'm going to break down something very suspicious that's going on that I'm seeing in the markets as well. What's happening with the debt ceiling, just talk about other details involving like Joe Biden and when he's going to be meeting again with McCarthy, and other things involving SPY and the data coming out for the week. Before I break anything down about all this information and talk about what the market is likely going to do, let me just mention a couple of things real quick. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, whether it's $1 or $100 is up to you. You're guaranteed up to 12 free stocks, each worth up to $3,000. And the best part is any could be a free Tesla or NEO share. The offer ends very soon. It ends just 1 week from now, so check it out before they run out. With that out of the way, let's get on with the video. So the market's in a very, very interesting place, and I have to be honest, I think this is very suspicious, this price action we've been seeing. And let me break down exactly why I think that. Now, I'm going to be very open-minded, especially when trading a market like this. I'm open to the idea that anything could happen depending on the debt ceiling. Right? It's still possible for the market to get a crazy short squeeze, but it's also possible that this pump the market has seen over the last couple of trading days is a bull trap, and they're tricking a lot of people. And there is evidence that's supporting each of the sides. But let me now break down what the evidences are and what's more likely. Now, so far, things are starting to change in Washington, D.C. We're seeing more and more politicians just continuing to argue about the debt ceiling. Many are saying that progress is not being made. But Joe Biden is going to be meeting with Kevin McCarthy again on Monday. That's going to be very important. It's going to cause a big move for the markets tomorrow. On top of that, as far as the progress goes, so far it's been mainly just talk about how they're going to be working and what these politicians want to do. We're starting to see a lot of the finger pointing, the name calling, and the arguing that just typically goes on, right? And I really don't like to see that, but that's what tends to happen. And I'm going to be open-minded because there's a possibility they close the deal. Okay, there is a possibility it happens today, later today, maybe going into tomorrow. If it happens, the market's going to rip to the upside. We're going to see a short squeeze, a big one. But if it doesn't happen, if they fail to close the deal and they just start arguing like they've been for the last couple of days over the weekend, there were even days where we saw politicians just walk out on other ones. We saw politicians just arguing with each other and just blaming the others, saying the White House is being unreasonable. It just became pretty wild. And honestly, if this continues and they just don't close the deal, the longer it takes them, the worse it's going to be for the stock market. Now, if the deal is closed, the market rallies. If they don't close it, it's not going to be good. And so far, there's no deal that has been closed. If anything, they've just continued to argue and just play politics as they typically do. Now, I could go into the full details, but really so far, nothing is really too huge that I would say has happened in terms of progress. They're going to be meeting later on today once Biden returns from Asia, so we'll see what happens. But just look out on the news. If the deal is done and it's ready to pass Congress, that's going to be bullish for the markets. We're going to rip tomorrow. If it doesn't happen, the odds favor us getting a rug pull. But technicals are telling a very different story. Technicals are starting to look more bearish in my eyes. And let me break down what just happened in the markets. Well, for Friday, which is May 19th right here, we had a ton of puts expiring, over 2.6 million of them. And that's part of why the market makers caused the market to pump. So they pumped the market very hard approaching this date because of all the options expirations. And many of us were just not as sure about it because we were getting some bearish signals even earlier. We were just not so certain. And they didn't just pump us a little bit. This was like a crazy pump off the news. But what the market makers did is they used the news to their advantage. They used the news about the debt ceiling to pump the markets harder to squeeze shorts. But here's the interesting thing. From tomorrow, we don't have too many crazy options expiration days until Friday's a little bit big with lots of puts. And then the same thing happens for the next week until like June 1st. So the options chain is going to become weaker, not as filled between Monday and Thursday of this week. that could open doors for more downside, right? Not saying it's guaranteed. I'm just saying that means the market makers are more prepared for it. The market makers could take some hits and let the market drop a bit. They're okay with that. In fact, the same market makers could even be shorting the market, right? They're players in the market too. For tomorrow, we have Bullard, Barkin, and Bostic speaking. They tend to be more hawkish. Bullard tends to be more like in the middle, kind of like dovish, but Barkin and Bostic tend to be the opposite. Be careful with them. They tend to not be as lenient, but I don't really expect too much to happen when they speak compared to like last week when we saw the market react to the Fed speakers. Then, as far as earnings goes, we have Zoom, PetMeds, and a couple of other ones for Monday. For Tuesday, we have Lowe's, Dick's Sporting Goods, and a couple of others like Intuit and AutoZone. For Wednesday, we have Nvidia. It's going to be a big one, plus Kohl's. Then we have Best Buy and Costco for Thursday. And then finally, for Friday, we have Big Lots. That's going to be one of the biggest ones on Friday. We have lots of retail for the week, but nothing too huge. But let's talk about what's happening with the charts. And this is what's becoming very suspicious to me. When you look at the short interest on lots of companies like Tesla, Tesla saw over 40 plus million shares shorted on Friday, more than 40 million. We saw lots of shorting going on, lots of shorts piled in. Could it be that they know something? Could it be, okay, that they pump the markets hard like this so that the puts, the short positions become very cheap to open so they could smack the market right back down and this whole thing is a trap? That's the more bearish case. That's going to depend on the debt ceiling. The bullish case also depends on the debt ceiling. If they close the deal, we could pump more. But what are the charts telling us? There is technically a bearish divergence developing on the QQQ. It technically is still there, but there's no guarantee it's done developing just yet. You can see it right here on the PPO on the daily chart. Same thing on the hourly time frames, right? It's still valid. We're in the middle right now. We could see this thing pump, but the odds do favor us cooling off on the RSI. I think we're going to try to pump a little bit more and then just get rejection. And as the debt ceiling perpetuates, if the deal is not closed, then we're going to see downside and see the QQQ reach about 332 to 330. But once again, I'm very open-minded because it depends heavily on what happens with the data and the debt ceiling if it gets closed or not. But like I said before, from a technical standpoint, it's looking a little bit weaker in my opinion. For SPY, the same thing is going on. Might try to get to this middle basis band, get to about close to 419. But then after that, there's likely downside coming. The odds favor that from a technical standpoint as we form this bearish divergence. But I'm not as fixated on the TA. It depends on the debt ceiling. So far, the odds favor them not closing the deal, seeing how everyone's just still arguing and not doing too much so far. Many people are saying that the debt ceiling agreement is going to come soon. I think it's possible thanks to Janet Yellen, but I don't know about today. That's the thing. The market was waiting for today. For Tesla, this is very suspicious. Tesla looks very suspicious in my eyes. Yes, it pumped. Yes, it looks good. But the shorts doubled down on Tesla. They might try to drag it down to the mid 170s. Why are they shorting Tesla so hard? Is it about to short squeeze or are they about to smack it down? Could it be that they know something about the debt ceiling and they just tried to pump the markets just to destroy a lot of people that were shorting? And then once everyone turns bullish, because a lot of people turn into perma bulls, this could be the opportunity for the shorts to double down and give them an awakening. As far as, let's just talk about the NASDAQ. There was a bearish divergence that developed on the 1 hour time frame. It is starting to cool off a bit. Might continue on the downtrend, might pump first and then cool off. The odds favor it making its way down to the mid 12,000s. 12,500 area, sorry. And then as far as SPX goes, I'm not seeing the same thing on SPX. It actually has more relative strength, but it is about to get a crossover on the PPO, so it might push a little bit, then start downtrending a little bit. Odds are starting to favor that. The VIX is near the lower Bollinger Band. When we tend to hit this on the daily chart, we tend to see the VIX bounce. So the VIX might cool off a little bit more than try to bounce from here. That's what typically happens. Odds are favoring that. The SQQQ might try to bounce as it's at the lower Bollinger Band. Just remember, it all depends on the debt ceiling, but from a technical standpoint, that's what technicals are favoring. The dollar is above 103. That tends to be more bearish for the markets. If it does hold 103 and it keeps going, that will be even more bearish. But for now, it is a little bit overbought. It's at the upper Bollinger, so excuse me. It might just cool off a tiny bit more, then trying to make its way up again. We'll see what the dollar does. If it keeps going, that's going to become more bearish for the markets. Coinbase is likely going to try to bounce off this basis band line, get to about closer to about 58, then make its way down. If it fails at 54, if that fails, it's going to make its way down to the 40s. So watch that very carefully. As far as Aapl goes, if we're bullish on Aapl, it could try to pump more, but there is a bearish divergence on the daily chart, a potential reversal candle that could bring it down to the lower 170s. I think the odds favor that, as Aapl is showing some signs of exhaustion, but it will depend on the debt ceiling, but the technicals are looking in that direction. Nvidia is holding up quite nicely, but it is quite overbought. It is near the upper Bollinger Band. When we hit this, we tend to see it reject a little bit. So far, there are some signs about that. There are some imbalances in the 300s. If the market does cool off, we might see Nvidia cool off too. But this all, once again, depends on the debt ceiling. We might get a balance in the beginning, but if it ends up failing, then we have these imbalances down here around like these low 300s, also in the 310s. We could see 310 very, very soon if we don't get the good news from the debt ceiling, and the odds favor that. As far as Google goes, might try to bounce to about 124, then reject and make its way down to about 122, which is where the lower Bollinger is. Could drop a little bit lower to about 120 after that. Odds favor that because it is showing some signs of price exhaustion. There's a bearish divergence right here too that is starting to play out. 121 is where it's going to try to base, and it could drop as low as 119. That's where we have another imbalance. If it breaks below this 122 area, it's going to make its way down to 119. That's the next imbalance. The odds are favoring that over the next couple of trading days. Same thing with Amazon. There's a bearish divergence on the 1 hour time frame. You could also see it on the 30 minutes. Bearish divergence. And then it might try to bounce first, then make its way down a little bit lower. I think Amazon's going to try to test 117, then reject and come down. The odds favor that from a technical standpoint, but it's also going to depend heavily on what happens with the debt ceiling. All right. Anyways, guys, I just wanted to say that I most definitely appreciate every single one of you. As far as Meta goes, let me just add that Meta is still looking a little bit weak. Meta, in my opinion, is likely going to make an attempt to pump a bit. Might try to pump just a tiny bit to where that upper Bollinger is, like that 1246 area. Then it could reject and make its way all the way down to about the 240 flat zone, if not a little bit lower than that. The odds favored pumping a little bit, then getting that rejection. And then after that, we'll just see what happens with the news. So anyways, guys, the technicals are starting to look more bearish, right? It looks like the market's overextended and we might want to cool off a bit. However, I'm always going to be open-minded. It's always important to be open-minded to the debt ceiling. If we get a good piece of news, these technical indicators could be invalidated and we could see the market continue to squeeze. It all depends on the news. But the technicals are looking more and more like we're going to see some more bearish price action, and the market might pump a little bit more, then see more and more bearish price action, after that. All right, guys, thank you all for listening. I want to keep this one kind of short. I also want to note that I have some merch for you guys if you're interested in buying anything, like a shirt that says "To the Moon" or "Buy the Dip," or we have options. It's really your choice. Don't forget about the Webull link. Offer ends very soon. Deposit any amount of money and you're guaranteed up to 12 free stocks worth up to $3,000 each. Thank you for listening. Have a great weekend. Market to the moon as the long term is very bright. And peace out.